Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes here on Monday the 17th of February, sponsored by the UK Investor Show. That's held on Saturday, April the 25th. Starting off with AFC Energy, where you can see there's a rising trend channel there that I've drawn from November. We broke the main resistance line there, or the trigger line there, the triangle, for the chart there around the 21 pence level at the beginning of the month, and above that really looking for a target as high as 40 pence over the next few weeks. At this stage, ideally, we hold above recent resistance rather, around the 24 pence level. That was the peak in January and also in early February as well. So plenty to play for there still. Rather strange chart here coming in the form of Cobra Resources, where we've had this break. We've actually got not to a chart really. There's not much price action there to look at, but it does appear that we have a triangle breakout there, a rising trend channel there from the end of November, and at least while we're above that resistance line break that we've had from November around the 1.3 pence level, the target here could be as high as 2.6 pence at the top of the late 2019 price channel. Stop loss, I suppose, as far as the bulls are concerned, at least staying above the 50-day moving average at 1.11. While we're above that, we are regarded as being in bull mode. Stock which is almost impossible to fathom at the moment, apart from if you look at the trend lines that I've drawn. We had Goldstone Resources breaking the main 2.5 pence resistance, I suppose a week or so ago. Also in the run-up to a golden cross between the 50-day and 200-day moving averages at currently at 1.7 pence. But the message at the moment really relatively simple. While we're above 2.5, the target here, at least a more solid 3.5 pence, i.e. staying up at that level rather than just the blink and you missed it type of moves that we've had before. At this stage, although it would be nice to project a higher target, it's still a bit early to go for the 4.5 pence or 5 pence target that you might get from that resistance line there from March last year. But at the moment, 2.5 to 3.5 covers it. Best case scenario, 5 pence, but a bit early on that at this stage. Stock which has given us absolutely no problem at all in terms of the upside scenario is Kia Group. The only, I suppose, problem with this setup was that you probably wouldn't believe there'd be such a big move on a relatively dull price action stock. But we had the move breaking that triangle there at the end of last month, beginning of this month, in the 90s. And if you bought anywhere in the 90s at that point, even up to 100 pence, you'd be rather happy now, given that we're just shy of £1.50. Pretty decent return in just under 3 weeks for the situation there. As far as what the upside from this area could be, still it's a possibility of an August resistance line projection heading towards 185 pence over the next few weeks. And that's really valid while we hold above today's intraday low around £1.32. So reasonable risk reward, even though the shares are now pretty overbought with the RSI at 80, but that's not totally out of the running as far as more moves could be concerned. Metal NRG next, and we've been waiting for days for this stock to emerge out of this triangle there, the top of the triangle, I suppose, around the 0.57 level, above that level now with a breakout 0.57, looking for decent upside. Rising trend channel can be drawn from the end of November heading towards 1.2 pence, and given the extended consolidation that we've had now that the log jam has been broken, one would expect the shares to make pretty swift progress towards that technical target. Trading stop with the 50-day moving average there at 0.54, but ideally we stay above 0.57, that December resistance line. Stock coming up next is one I've covered several times now, and the reason for covering the stock today is that there's a possibility that Novocyte becomes the first 10-bagger on the Bulletin Board Heroes this year, which would be quite unbelievable. But Obviously, we are in a rather strange times at the moment with the coronavirus situation. The view here is that at least while we're above that November 2017 resistance line projection at 100 pence, there's a chance of a resistance line projection from just after that, towards the end of that month in 2017, heading as high as £1.80 over the next few weeks. So we'll see whether that amazing scenario pans out. Nanoco is good to see that it's actually delivered on the recovery scenario that was highlighted here just I suppose 3 or 4 weeks ago now, at the end of towards the end of January. That time we were looking for 20p. Now with 20p in the bag, one can say that at least while we're above the 200-day moving average at 17.5 pence, there's a chance of the shares filling the top of that gap down rather from June last year, as high as 32 pence. But that is clearly quite an ambitious target at this stage. Finishing off with a stock which I'm pleased that has delivered the goods as far as the bulls are concerned. Zoetic, after a rather slow start there, after breaking that falling wedge towards the second half of January, we've seen the shares now deliver with a 30% gain. Looks as though we could hit the top of a rising trend channel from October as high as 17-18 pence over the next month or so, given the current rate of acceleration. Just wanted to cover one stock which has been requested today, which is Big Dish. Here you can see that the share is finally gapping through the 200-day moving average. That's currently at 3.35 pence. Gapping through the 200-day line is one of the stronger technical signals, as is a gap through the 50-day, which we've mentioned with other stocks here of late. The view at this stage is that at least while we're above the initial support for February at 2.7 pence, we could hit the top of a rising trend channel from July, heading as high as 7 pence. The other positive at the moment is the way that both the 50-day and 200-day lines are currently rising. This is normally the prelude to a golden cross buy signal between the two moving averages, and historically the run-up to such crosses tends to be the strongest part in the technical cycle for a stock or market. So we shall see how well Big Dish delivers on that. The 50-day moving average there running at 2.23 pence, and the stock regarded as being in bull mode while we hold above that particular feature. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.